The greatest determining factor of being successful when it comes to investing has very, very little to do with your underlying investments. They're really, and look, my background's in quantitative finance, so I take it really seriously on the structure and how you invest your wealth. It really comes down to your behavior, how you act, how you react. Let's say you found the greatest investment strategy in the world. If you do, call me, I'd love to hear about it. But let's say you found it and you bailed out of it the next time there was a market correction or a market crash because you were scared. And I'm not saying not to be nervous when those things happen. You basically seal your own fate versus somebody that has a basic average portfolio and they just don't react to these types of things, right? They might not get there as quickly with the greatest investment strategy in the world, but they're not cannibalizing themselves. They're not digging up what they planted every time it rains. And I remember this was back in 2010. I was at a friend of mine's house out in Long Island, and he was having a birthday party for one of his kids. And it was like in the backyard. They had clowns and bouncy houses and all of that. And so I was like, yeah, sure, I'd come over. I think she was like 4 or 5 years old. And so I came over there and I was catching up with all of my friends and saying hello to his kids and everything. We were having a good time. And I see his father-in-law, who I'd met years before at their wedding, who I got along with marvelously. He was a great guy. He was a big life of the party type guy. And I see him sitting in the backyard on an old lawn chair, drinking like a Corona or something, but he looked like a shell of who he was. I mean, this guy was like the life of the world. And I leaned over to my friend. I was like, "What's up with your father-in-law? I mean, he looks like he's in bad shape." And he said, "Mike, I've really been meaning to talk to you about it. He's had some issues financially, and he's just been in this depression. And I was hoping that you would talk to him." So I'm like, "Absolutely." So, I grabbed a chair, I grabbed a beer, I sat down next to him and, just started, shooting the shit with him, just chatting it up. About 10 minutes in, I looked at him, I said, "What's going on with you? I mean, this is not the guy I remember." And he's like, "Look, I've been wanting to call you for like a year. I just have not been able to do it." And I'm like, "What's going on?" And he's like, "Look, my entire life, I ran my business, I raised 2 great kids, put a roof over their heads, took them on vacation, put them through school, business school, law school. I have great kids and all of that. Sold my business for, not huge money, but, enough money that was a little bit over $5 million at the time." And this was back, I think, in 2005 when he sold his business. And, it was enough for my wife and I to really have a nice, comfortable retirement and live the way that we want to live. And I'm like, "All right, well, that's great." And he's like, "Well, a couple years after that, the financial crisis had happened." And I was just freaking out, he's saying to me. And he's like, every month I'd get my statements and I'd open them up and it was just getting worse and worse. And every time I turn on the news, the Jim Cramer was saying the world's coming to an end, CNBC, the financial media, everybody's saying the Dow's going to 2000 and it's the financial apocalypse and we're going to be on soup lines. And I remember, I think it was like December of 2008, I opened up my statement and about half of it was gone. And then Madoff happened. And he's like, "I just couldn't take it anymore. Like, I threw in the towel. I lost all trust in the system." And look, I understand this. I mean, I lived through that time and that was a very scary time. So he sold not quite at the bottom, right? The bottom actually came in back in March of 2009. But the problem is this: by the time we were talking, the market had all but recovered, those terrible losses from the financial crisis. And he was still sitting in cash. And he was well beyond his working years. He was around, I think 69 or 70 years old. I mean, still could work, but like his go-go, he ran a business for like 40 years. Like, he was done. And he's like, "I don't know what to do anymore. Like, we just don't have enough to live." And he's like, "Would you take a look and just, tell me if I did the right thing?" So I said, "Sure." So I looked at what had happened, did our analysis, and this was just the investment structure, the investment vehicles of it. And I met with him about a week or two later, and I said, "Listen, I wish I could tell you something different happened, but your structure, your investment structure, yeah, I might have done things a little bit differently, but it wasn't bad. I mean, it was pretty sound, and you'd probably be in a pretty good shape right now. Not only would have recouped that, but you probably would have been back on track of where you needed to be." And so I really felt bad for this guy because it wasn't poor, he still had a few $1,000,000, but he had to go work part-time just to like maintain his lifestyle, and he didn't want to do that anymore. He did that, but my point to this whole thing is that his behavior did him in. His investment structure, was it the greatest in the world? No, but it was fine. It was going to achieve what he needed to achieve. He did everything right through his entire life. He was a good man, ran a good family, right? Saved, worked hard, all of those things. A really ugly, scary financial crisis happened, and he capitulated because, one, we all have these biases, these cognitive biases, and he didn't really have the right team around him that was guiding him, that have been through these types of environments before. So that was a really, really scary thing to kind of look at, and I really feel bad for him. I still felt bad, still to this day, because that is something that could and should have been saved. Like, that should not have happened. Because most people, I think most people would have this type of reaction to it, but it's the advisors and the team that you're working with, their job not just to provide the legal structures and the investment solutions and all the things we've been talking about, but their job is to guide you through really uncharted territories and give you some guidance that these times will pass. Like, we're not going to an apocalyptic Thunderdome. And if we do, quite frankly, if it's Mad Max Beyond Thunderdome, it's all toilet paper anyway, so we have bigger fish to fry. So as long as we're not going into the Mad Max era, and if you don't know what Mad Max is, it's a movie from the 80s, an apocalyptic scenario. So as long as we're not doing that, you gotta weather those types of storms. And so when you have the right team around you, technically, yes, they have to be great. They've got to really know their stuff at a high level. But there's also the behavioral element, that bedside manner of coaching and consulting you through those really tough times. And it goes back to that financial neurosurgeon I was talking about the other day. You want to make sure that they're on point, but they can also give you the comfort as you're going into surgery and recovering from surgery that you're going to be okay, because there is a big psychological component to it.